Can I deduct my travel expenses? As a real estate investor, you probably have heard me say this a couple of times. The answer is it depends. Please stick around to the end of the video. We're going to talk about a pretty significant tip / trap relating to foreign travel. I'm George Doobie, saving the world from tax, one bow tie at a time. So what did the answer depend on? Well, generally speaking, Revenue Canada is looking to see whether or not you've incurred these expenses as part of the process of earning income from a business or a property. Let's jump into a couple of different examples. So on the real estate side, clearly there's going to be required at different points to have travel expenses. And Revenue Canada has their administrative opinions as to when and how this can be done. So some of the items that we're looking at, maybe they include costs of public transportation, automobile, and we're going to have a separate series of videos on calculating automobile expenses coming up. Maybe we're looking at meals and entertainment. We have a host of things that may be included as part of this. And part of this is now going to begin to depend on how many properties do we have. But overall, if we look at it through a lens of what would be reasonable in the circumstances, and are there exceptions, we're going to nail a lot of the opportunities that are available to us. One of those big exceptions relates to meals and entertainment. Generally, we're only going to be allowed to deduct 50% of the cost of meals or the entertainment. Entertainment's probably not as big of a factor in the travel side, maybe other areas in your business that it can relate to. But the concept of the 50% from Revenue Canada's eyes is to say, you are going to have to eat anyway, and why should the government of Canada and its taxpayers subsidize you for eating a meal? But they do acknowledge there are additional costs related to it that are possible, and hence the deduction. So as a real estate investor, we have restrictions with respect to the number of properties we own and the ability to more easily claim travel expenses. For example, owning one property, Revenue Canada is considering if you were to go out, do some repairs, you needed to move essentially some tools, for example, in order to do those repairs, they're okay with that. Having more than one property in the same area opens up the floodgates in the sense of now collecting rent is no longer considered a personal expense. I think there's certainly some question as to whether it should have been considered personal in the first place with just one property, but I think it's probably more accurate to describe it as that's Revenue Canada's way of saying this is what's reasonable for someone that has one property versus more properties. The more properties we have, the more lenient Revenue Canada is, and the more reasonable different expenses can appear. So a common question I'll receive is, I own some property outside of the city. I may have some properties in a different province, may even be a different country. How can I work with the travel expenses? What's deductible? And again, here the answer, as frequently it is it depends. So some things to be thinking about. For starters, Revenue Canada is very keen on restricting travel expenses where you only own one property. And going back to that lens that we described earlier of saying Revenue Canada is looking for reasonable amounts. So yes, it is possible, unquestionably, to deduct travel costs going to another city, going to another province, going to another country. Some of the potential hiccups, though, if, for example, you're routinely, and I should define that a little bit more, perhaps we are regularly going to another province or country. Was it really necessary for us to do that travel? Did that help us earn income from the business or property? Was it reasonable in the circumstances? Clearly, Revenue Canada is trying to weed out a scenario where, as a Canadian real estate investor, we have some properties in a sun-filled destination. Are we really going there to earn income? Are we going there more for personal recreation? That, again, is going to be, it depends. I think periodically going will not be an issue. Trying to argue you need to go down to Arizona or Florida for an extended period of time during the winter, we're going to start to get some pushback, as you would expect from Revenue Canada. And that's not to say that we can't combine some vacation element to that business or investment component, but now Revenue Canada is going to be very interested in how are we carving out the investment component versus the personal component. And if we've gone down and we're going to commonly need a little bit of time to look at the properties, depending what country we're talking about or a province, perhaps do some maintenance, supervise what's going on, again, that's reasonable. If we keep thinking about how much time was reasonable in terms of hotels, meals, entertainment, things of this nature, and ensuring that we had days that had enough meat and potatoes into them from a supervisory working on perspective, great. Whereas if, again, it looks like it would have taken a normal person a couple of hours to do whatever tasks you've identified, now we have some problems. We need to be able to say what was the primary purpose of that trip. It's okay if there's some extra, but let's be reasonable with Revenue Canada, and predominantly, they'll be reasonable with us. So if I own real estate in my personal name as compared to a corporation, are there any differences for deducting travel expenses? And again, as always, the answer is, of course, it depends, but a couple of things to be thinking of. First, and we'll have, again, a separate video series for this, the automobile expenses can be quite different in terms of how they're calculated. Moving on from this, it's again this concept of Revenue Canada looking at, were these expenses necessary for the purpose of earning income from a business or property? It's an interpretation question. With a corporation, there's what I'll call a prima facie case to be made that that activity within the corporation was a business. It was for the purpose of earning income. I've certainly been in scenarios in dealing with auditors where the taxpayer owned the properties personally, and the auditor argued that in their interpretation, and I'm hammering this term interpretation, but the costs were not relevant, or rather not related to the business or earning income from the property itself, but they were personal in nature. So just having that corporation helps remove some of the interpretation issues that can arise. So let's give some thought to, we're looking at some properties in another country. We're also taking some vacation time. Let's use the example of Orlando. So we're going to go visit Mickey Mouse. Is our primary purpose to look at property, or is it from a personal, recreational perspective? We're going to have to convince Revenue Canada and show them it's reasonable to believe that the purpose was at least including the ability or desire to buy properties. And clearly, I think it would probably be viewed as unreasonable if we were to go down, say, 10 years in a row and we've never bought a piece of property. On that first instance, perhaps we're going to be giving a little bit more the benefit of the doubt, provided, again, we're being reasonable in carving out the time, expenses relating to looking for the property versus the recreational aspect. In other words, if it was going to take us 3 days of property search, activities related to the properties, and we were down there for 10 days, we need to reasonably carve out hotel costs, meals, entertainment between the personal and the business component. To help us provide some evidence as to the business component, again, it's really important that we have itineraries. Be able to show Revenue Canada and justify that our days there, from that business perspective, were filled with activity that, again, was necessary for us to be down there, in contrast to someone else could have reasonably perhaps done this in 2 hours. The rest of the time they could be out by the pool or visiting Mickey Mouse in our example. Where we're reasonable with Revenue Canada and carving out the business component versus the personal component, we're much more likely to get those deductions and receive that benefit of the doubt. As a quick tip, and I really appreciate many people love social media. When we're down there looking for properties and allegedly doing business and investment activities, meeting with realtors, keeping records of the people that we've met, the time we spent, the nature of the conversations. If our social media, however, is showing a lot of pictures with Mickey Mouse, the kids running around a swimming pool, and not a whole lot of business investment activity, Revenue Canada is not silly. They also can check out your social media and see what's going on. Give yourself a helping hand. Frequently I'm asked, I'm attending this convention. As a real estate investor, am I allowed to deduct the costs associated with this? And the answer, of course, is it depends. But let's start trying to stack the deck in our favor. In Revenue Canada's eyes, we're allowed up to 2 conventions a year where they'll provide deductions. It starts to become fuzzy what a convention is as compared to a conference, as compared to attending courses, as compared to networking and business development opportunities or events. But nevertheless, we have to make an effort to distinguish those and show Revenue Canada that we're aware of those differences. Keeping in mind, this 2 convention limit that is not written in the Income Tax Act, that is Revenue Canada's interpretation of what reasonable means. Further defining what reasonable means, in Revenue Canada's eyes, where we have, for example, a local landlords association that's planning a trip to Arizona, Revenue Canada is not going to be quite as keen on this. They want to see that the organization or the governing body actually has jurisdiction, if you will, in the area that we're attending. So in our example, it may be appropriate to invite the Phoenix Landlord Association to help ensure that we have some deductibility opportunity. It's also worthwhile to consider where we are going down to Phoenix, we acknowledge we're going to spend some extra time down there, see the sights, play a little golf, whatever it may be. Let's ensure that we've made a reasonable attempt at dividing the business versus the personal. So provided our primary purpose of going down was from a business perspective, we should be able to deduct the full cost of airfare. In terms of meals and entertainment, again, if we're going to spend 10 days down there, 3 is hardcore convention, real estate oriented, and we can show and justify that. Let's acknowledge the personal component. If we're reasonable with Revenue Canada, predominantly, they'll be reasonable with us. Often a leading question or follow-up question to the travel expenses and foreign travel or out-of-province travel in particular, what happens if I'm inviting family, spouse, kids? How does this play into it? So let's again look at an example. But first, I think we can, in most cases, safely say having minor children attend with us is not going to help from that business perspective. I accept that there's going to be some exceptions to that. Having a spouse attend, however, completely different story, possibly. So again, here it's also going to start to depend on, well, for example, the age of the children. If one of the parents is attending conferences, business events, etc., and we have a couple of toddlers running around, that's probably a full-time job for the other parent. Again, harder to argue they were involved in the business aspects. Whereas if those children were teenagers, as an example, to a degree, they can take care of themselves. Often, that conference may have breakout sessions and whatnot for the spouse. So again, going down to the conference, having your husband attend the breakout sessions for the other spouses, that's all wonderful. And if again, maybe it's going to be, say, a day of the conference, of a 3-day conference, maybe we've justified the husband being able to be deducted for the 1 day, you're being deducted for, say, the 3 days, the kids, not at all. What we're trying to do is carve out the business versus the personal element. So it's not to say that you can't have spouses or children attending. It's to say, let's be reasonable. Was it really necessary? Did it help? In some areas, maybe both of the spouses are actually attending legitimately quite the conference from that business perspective. And whether that is directly or indirectly through managing back end of an office or clinic or whatever it may be, or even strategic planning related to overall, how are we operating our activities? Let's ensure we've got a reasonable story for Revenue Canada to see why it was necessary to have family there. A little trap exists as we potentially consider doing some travel out of the country. If we're making business decisions, signing contracts, deciding on some significant events for our corporation or business investment activities, we do run the risk of all of a sudden creating Nexus in a foreign country. Where's mind in management of that business? And Revenue Canada will almost always, of course, be arguing that's in Canada. This is just a trip. That foreign country may not have quite the same view as Revenue Canada. Or they may say there's actually a dual requirement, one for Canada, one for that foreign jurisdiction. So it's not to say that we can't do foreign travel. It's to say, let's be careful of the nature of that and where we're actually doing business. So the significance of Nexus? In short, this may mean you're filing tax returns other information returns, who knows what, in this foreign jurisdiction on top of what you have to do for Canada. And perhaps you're going to need to reconcile those. So that quick vacation / business trip may be a lot more than you bargained for. For real estate investors, I think you've probably seen now that travel expenses are not quite as simple as what they otherwise may appear to be. A last helpful tip, and I've certainly recommended this many times, it's not 100% foolproof, but where you're going, for example, to more of a resorty, nice place, attending business, etc., and maybe you're a little concerned there may be some question marks as to the personal versus the business component, invite your accountant. I think this will help significantly. Please do subscribe. We're trying to help you save taxes, build your legacy. Thank you. Have more questions? Please subscribe, follow, and even share. I want all of us to have the tax information we need to do wonderful things.